So, have you ever looked at $1,000 and thought, how do I turn this into a real fortune? Well, today, that's exactly what we're going to do. We're taking on a challenge with 5 different assets, and yeah, I'm putting my own money on the line to see what actually happens. But here's the real question, right? How do you actually make that work, especially when the economy's feeling, well, a little shaky? We're going to explore everything from the safest, low risk stuff all the way up to some pretty high stakes gambles, just to find out. All right, first up, let's build the foundation. We're starting with some low risk growth strategies. First on the list is a classic for a reason: index funds. Think of it this way: instead of trying to pick one winning horse, you're just betting on the entire race. It's a famously consistent way to grow your money over the long haul. And just look at this risk score, a 3 out of 10. It's one of the safest long-term investments out there for a simple reason. You're spread out across hundreds of the biggest companies. That diversification is like a cushion. If one company has a bad year, it doesn't sink your whole portfolio. This right here, this shows you the mind-blowing power of slow and steady growth. Just think about it, $5 a day. That's like the price of a Starbucks coffee. If you invest that consistently into a big market index, like the S&P 500, that tiny daily habit can snowball into a massive pile of cash over a lifetime. Okay, let's switch gears to our second investment. This is one where all the power is in your hands, starting your own business. Now, the risk score here is just a tiny bit higher than index funds. And yeah, of course, you could lose what you put in, but the huge difference here is control. You are in the driver's seat. Your success is tied directly to your hustle and your ideas. And the potential payoff, it's just huge. A study from Fidelity Investments found that a staggering 88% of millionaires are self-made. They're entrepreneurs. It just goes to show that sometimes the best thing you can invest in is yourself. All right, so we've covered the basics. Now for section 2, and this one's a bit of a surprise. We're looking at an unconventional asset that has shown some serious strength. Okay, here's a fun question for you. Besides being artists that pretty much everyone has heard of, what in the world do Picasso and Banksy have in common with the stock market? The answer? Well, it's probably not what you're thinking. And here you have it. Get this. While the S&P 500 returned a solid 9.5% over the last 25 years, which is great, the contemporary art market delivered an average of 14%. It's a market that has proven to be incredibly resilient even when the rest of the economy is struggling. The risk here is a moderate 5 out of 10. And, this used to be a super exclusive playground for the mega rich. But what's really changed the game is accessibility. There are now platforms that let you buy fractional shares of multi-million-dollar paintings, so everyday folks can get a piece of the action. We've built our foundation. We've explored a surprise. Now it's time for section 3. Let's talk high stakes, where the potential for reward and, for loss gets a whole lot bigger. So our fourth investment, picking individual stocks. This is where you graduate from betting on the whole market to betting on specific companies that you really, truly believe in. And you can see the risk score jumps way up to a 7 out of 10. So why is it so high? Well, while finding the next Amazon could lead to life-changing returns, the data is kind of brutal. Something like 90% of people who try to pick their own stocks actually lose money. It's a high-stakes game that takes serious homework. This slide really breaks it down perfectly. With index funds, you get that nice, comfy diversification in a hands-off, passive way. With individual stocks, you get all the control and the chance to beat the market, but you're also taking on all of the risk yourself. All right, on to our final investment, and you probably knew this was coming. It's the asset that's become synonymous with getting rich quick in the last few years: cryptocurrency. At an 8.5 out of 10, this is our riskiest investment yet. The price swings, they can be absolutely wild. But here's the thing. The blockchain technology that it's all built on, which is basically this super secure, decentralized digital record book, is seen by a lot of smart people as being totally revolutionary. It has the potential to shake up entire industries. So, we've covered 5 very different investments. But to really truly understand risk, we have to look at one more thing. It's something people often confuse with investing, but believe me, it is in a category all its own. For the last part of this whole $1,000 challenge, I did something I honestly never thought I'd do: online gambling. A perfect 10 out of 10 on the risk scale. I really just wanted to see how fast that money could vanish. But what happened next? I almost didn't even include this. On my very first try, with $1,000 on the line, I won $4,000. Just like that, instantly. And this right here, this is the danger. This is the rush that gets people absolutely hooked, making them think, hey, I can beat the system. But I had to prove the point, so I tried again. And just as quickly as it appeared, the house reminded me who's really in charge. That $1,000 turned into just $350, a $650 loss in a few seconds. And that brings us to the most important difference of all. Investing, even when it's high risk, is about putting your money into assets that have a real, reasonable chance of growing over time. Gambling, well, it's a game that is mathematically designed for you to lose. In the long run, the house always wins. And that's what I want to leave you with. As these new, volatile assets pop up, the lines are getting blurrier and blurrier. So it's more important than ever to ask yourself, where do you, personally, draw the line between taking a calculated risk and just rolling the dice?